Hey everyone, ready to dive into some seriously fascinating stuff. We're tackling economic crises today. Those moments when, the markets go a little haywire.
It's more than a little haywire sometimes.
True, true. But you've brought us aprendiendo de las crisis anteriores para invertir con éxito en el futuro. And it's got some real eye-openers about what makes these financial roller coasters go up and, well, crash down.
And what's striking is how the source takes us back to a time when trading floors were, well, a completely different beast.
It paints a picture, right?
Yeah.
Like traders shouting prices through those, what are they called?
Boxes. They were called boxes.
Boxes, right, and those old green screen monitors. It's like stepping back in time.
And the pace. Information trickled in compared to the flood we have now with digital exchanges.
Imagine that.
Mm.
But here's the thing. Even with all the tech, one thing stays the same, right? Human psychology.
The source really nails that point. It's the driving force behind those market swings.
Yeah, and it's not just some abstract thing. The book gives that example of buying a house at a ridiculously low price. Shows how an offer itself can create this, perception of value, even if it makes zero logical sense.
Totally. It highlights how prices in the market don't always reflect, actual worth. They're influenced by fear, greed, emotions that often, let's be honest, completely override logic.
And that leads to prices going through the roof or plummeting.
Exactly.
Okay, so example time. The dot-com bubble, the Wild West of the internet age. Remember that?
Oh, absolutely. Everyone was buzzing about the new economy, right? Dial-up internet, those first clunky cell phones. It felt like we were on the verge of something massive.
Huge. And the source uses Terra, the Spanish internet company, prime example, right?
Yeah, Terra, it was a stock to have, even though looking back, their business model was a bit,
Questionable.
let's go with questionable. But it shows how hype can drive prices sky high. The source mentions Terra's stock went up over 1,000% after going public.
1,000%. That's wild, but what goes up?
Usually comes down. And when the dot-com bubble burst, it was a hard landing. Terra, along with a bunch of others, took a nosedive, trillions of dollars, gone.
A stark reminder, right? Markets move in cycles. But the source, it doesn't just stop at the dot-com bubble. It goes through a whole bunch of economic crashes, doesn't it?
It gives a really good overview. You've got the 1987 crash, the Asian financial crisis, the Russian default in '98. Each one had its own unique triggers, of course.
But there's a common thread, right?
The source points to this dangerous combo. Excessive leverage and asset prices totally out of whack with the actual economy.
A recipe for disaster. And then we get to 2008, the big one, the crisis that shook the entire global financial system.
Yeah, 2008 was a doozy. The source really digs into how complex it was, especially those financial instruments. ABSs, MBSs, derivatives. They sound intimidating, right?
They do, but the source explains them in a way that even I could understand. For those of us who don't speak Wall Street, can you give us a quick rundown? What were these things and how they contribute to the whole mess?
Okay, so imagine bundles of loans, lots of them, right? Often mortgages.
Okay, I'm with you. Bundles of mortgages.
And they were sliced up, repackaged, sold off to investors all over the place.
Spreading the risk, right? That's the idea I've heard.
That was the theory. But it backfired. Big time.
Because when the housing bubble went bust and people couldn't pay their mortgages,
Domino effect. Those bundles, they weren't worth much, were they? Became toxic assets, basically. And the banks holding them, well,
they started going under.
exactly. Credit markets froze up. Businesses couldn't get loans. It was a mess. Global economy took a nosedive.
It's scary how quickly things unraveled.
Yeah.
And the source doesn't shy away from the human cost. That part about people making frantic phone calls during the crash, just grasping for any kind of answer. It really stuck with me.
Nobody had answers? It was chaos. Pure uncertainty, fear. The source really captures that panic. People lost everything. Homes, jobs, savings.
It's a reminder that this isn't just about numbers.
Not at all. Real lives are at stake.
But even with the 2008 crash, just like the dot-com one, there's this element of, human psychology fueling the recovery too, right?
Absolutely. Governments and central banks, they went into overdrive. Interventions on a scale we'd never seen before. Quantitative easing, bailouts.
Trying to pump the brakes, stop the whole system from crashing.
Exactly. Restore some confidence. And it's interesting, isn't it, how these crises force a rethink. Economic policies, regulations, everything's up for grabs.
Like a reset button gets hit.
In a way, the 2008 crisis, the source points out, led to stricter regulations for banks, new rules for the whole financial industry, trying to, learn from the mistakes.
Because as we know, History has this habit of repeating itself, even if the details are different each time. Which brings us to, well, more recent events. COVID, the crash, the roller coaster we're still riding, really.
Pandemic threw everyone for a loop. Lockdowns, supply chains disrupted, jobs lost. It was unprecedented, a total economic shock.
And yet, the market recovered surprisingly fast. Makes you wonder, did those massive stimulus packages, the central bank interventions, did they play a part?
They did. But the source raises a good point, doesn't it? About the disconnect between that market rebound and what was actually happening in the real economy.
Right, like were we just delaying the inevitable with all that stimulus?
A valid question, because we've seen the fallout. Inflation going nuts, debt levels through the roof. Hard not to think there's a reckoning coming.
And then on top of that, you've got everything else going on. The war in Ukraine, energy crisis, interest rates climbing.
It's a lot. A very complex, volatile situation. The source uses a great analogy, by the way.
You mean the firefighter analogy?
That's the one, so clear, explains how too much intervention, even if it's well-intentioned, can backfire.
Right. You need firefighters to put out the fire, sure. But if they keep pouring water on the ashes, you've got a flood on your hands.
Precisely. It's a delicate balance. Support the economy, yes, but not create bigger problems down the line.
So for our listener, trying to make sense of this, trying to invest wisely, what's the key takeaway here? How do we navigate this crazy economic landscape?
Yeah.
And this is where it gets really interesting, right? The source, it doesn't just focus on the past. It hints at some potential future scenarios. Kind of gets you to thinking.
What's fascinating is how it connects these past crises, these events, to the potential for some big shifts in the global economy. We're talking the rise of China, maybe the U.S. dollar losing its grip a little, the whole move towards sustainability.
It's not just theoretical, right? These shifts, they'd have huge implications for investors, for everyone, really.
Absolutely.
So, okay, let's break it down. The source suggests China could become the world's top economic power, even ahead of the U.S. What would that mean for global markets? I mean, it's a big deal.
It is a big deal. And you have to connect it to the bigger picture, right? A shift in economic power. It usually means a shift in financial power, too. We could see a move away from the U.S. dollar as the main global currency, maybe towards the Chinese yuan. That would have massive implications. Trade, investments, global financial stability, everything.
It's almost hard to wrap your head around.
Yeah.
And what about this whole sustainability thing, it feels like? More and more, climate change, ESG investing, it's becoming impossible to ignore.
It is. And the source, it hints at a future where companies, they're not just judged on profits anymore. Environmental and social impact, that's becoming key. And that creates both risks and opportunities for investors.
So companies that don't adapt, they could be in trouble.
Exactly. But those that embrace sustainability, those are the ones that could really thrive. It's a whole new way of looking at things.
It's not just about picking stocks anymore. It's about understanding these global trends, these forces that are shaping the world, right?
Exactly. This source, it pushes us to think long-term, to be adaptable, to anticipate, and to be prepared for a future that might look radically different from the past.
So as we wrap up, is there one big thought, one question that you want to leave our listener with?
We've covered a lot of ground here. Past crises, potential future scenarios. But the key thing is, what are you going to do with this information? How are you going to navigate the challenges, seize the opportunities in this ever-changing economic landscape? That's the question I would ask yourself.
That's a great question. A lot to think about. Thanks to you and thanks to everyone for joining us on this deep dive into the world of economic crises. Until next time.